Bitcoin fell to $59,850 yesterday. And while we're seeing a lot of volatility within the price action, I am still confident that things are going to be holding up for the longer term. So in today's video, I'm going to be taking a look at Bitcoin. We'll take a look at the small, short term, the medium term, and that longer term view for BTC. As I get into today's video, guys, if you do find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, go ahead and subscribe, tap the bell, select all the notifications, and you will not miss another update. So let's go ahead and take a look at what's going on here with BTC. So we're going to roll this down into a 4-hour time frame just to kind of review these recent structures that we've seen when it comes to BTC. Okay, so our targeted range that we were talking about yesterday was between the 56,782 and $58,389 approximately, as you can kind of see here. On the 4-hour time frame, this is a 3-wave movement. Okay, so we're tracking the idea of a 3-wave move like this. Now, we've already met minimum expectations with all of the structures that we've seen so far. And there are a lot of bulls out there hoping that we've kind of reached a bottom for BTC. Okay, and it's quite an interesting structure that we've kind of seen so far. We can see that there is this previous area just over here on the left-hand side on the 10th of July through to the 11th of July. This range is an area that was previously resistance, and we could come down towards it, right? 58,977 to 59,650. Okay, so it's an interesting zone for us. And I want to kind of stress that although we have that ability to come down into this deeper range of 56,700 to 58,400, it is still a probability, right? We're talking about probabilities rather than guarantees. As with everything in crypto, nothing is a guarantee. If we roll this down into a 1-hour time frame, we can really scrutinize this structure even more. And the reason as to kind of why I'm thinking that this is a bouncing area where we're probably going to be rallying up just a fraction before we continue down is that we are looking for a WXY pattern. A WXY pattern is a double zigzag. A zigzag pattern is an ABC structure. So let me show you what I'm looking at. So here we can kind of see an A, a B, and a C. Okay, we then have that relief rally to the upside. We're then looking, in my opinion, for another B wave and then a C wave to come on down like this. Okay, so this is why we have that kind of range. Now, obviously, nothing is a guarantee because we could also look at this through many different lenses. But I do want to kind of state at this point in time, it can be a possibility here that we do reach those kind of low levels of around 56K. But like I say, nothing is a guarantee. So I want to stress that. So our kind of short-term view is actually a relief rally for BTC. As you can kind of see here, we're kind of pushing up. I still think we have another push to the upside before we get into those next big moves to the downside. You can see here that we are approaching the overbought area, but we're not yet there on the 1-hour time frame. Roll this up into a 4-hour time frame. You can see here that we still are kind of bouncing around that oversold area, but we still have plenty of room to the downside. Okay, so our short-term view is a continued run to the upside. And as I use the word run very, very loosely here, because I don't think a run in the sense of, oh, we're bullish, we're going to continue moving to the upside in a really big way is highly probable. But what I would be looking for would be around that kind of 61,300 to 61,500 in that kind of range will be where my expectations would kind of place this. This will basically be an area of interest actually right inside this little sweet spot right here, previous area of support turning into resistance, and then we continue this move to the downside. On the 1-hour time frame, we're obviously bearish because we are below the 200-day EMA, the 50 EMA, the 50 SMA, and the same is also true here on the 4-hour time frame. We're looking for the death cross here with the yellow line, the 50 SMA coming down, crossing lower than the 200 EMA, the white line. So a death cross is looming on the 4-hour time frame. We've already seen that over here on the 1-hour time frame. You can see that on the 31st of July. And then, of course, the big dumps to the downside afterwards, right? So resistances are, of course, on the 50 EMA, 50 SMA, which is where I think we're likely to find more resistance and more of a push to the downside for BTC. A lot of this, I think, is coming actually ahead of the Fed pivot. So anyone who's kind of been around for a while will know that we've been talking about the Federal Reserve cutting their interest rates in September. We actually said Q3 about 18 months ago. So Q3 2024 was the forecast on the Federal Reserve cutting their interest rates. And that's kind of where we're tracking us at the minute. Now, historically speaking, the kind of dumps in the market actually happen after a Federal Reserve pivot. But I'm starting to look at the market through the lens that maybe we actually have had it before the Federal Reserve pivot. And a lot of this is probably down to delays with how the Fed have been approaching the markets in terms of their interest rates. We saw them do 0.25s rather than 0.5s that we saw, let's say, over in Europe or over in the UK. So the central bank, the Federal Reserve over in the US, were kind of a little bit slow, a little bit laggy in doing what they needed to do to get the job done. And as such, I think the markets have actually reacted more towards the kind of pivots that we've seen with the European central banks, the UK banks, right? We've seen those pivots, we've seen those interest rate cuts, whereas the US are lagging behind others. So I think we're actually seeing this already, so a little bit ahead of the time. That's going to be really interesting to see what happens when the Federal Reserve actually pivot, because historically when the Fed's pivoted, we see the crash, but I'm thinking we're seeing the crash already. I could be wrong on that, but we'll keep a close eye on it. So expect a little bit of a bump to the upside, I think, on the 1 and 4 hour timeframes, but ultimately I think we're expecting those moves to the downside. Rolling this up into a daily time frame for our medium kind of outlook, we are of course looking, and we have, and as I said kind of like yesterday, we're looking at finding support on that 200-day EMA, $59,574. Sorry, and this is an area that we kind of tested out previously in June. We lost it in early July. We rallied back above it and got closed position on the 13th of July, coming back down here to test it again. I think this is going to be a really tough area for BTC to hold. I am expecting us to move down more towards that kind of $56,800 target range. So we're going to be looking at this, thinking that this is where we're likely to find support. I'm not expecting us to drop down lower than our origin down here, the origin of our 5-wave move at 53,485. It is possible, though, under what I was talking about the other day, which is the running flat correction, right? Which would basically be inside here like so. And now I'm looking at it in that kind of lens and through that kind of point of view, there could be a pretty bearish place for Bitcoin. And if we do drop down lower than 53,485, I am going to be targeting out that 49,300 to 51,800, which will be very, very bearish for Bitcoin. And it'll be an interesting kind of take to see how many people kind of get wrecked on that, but also who's kind of doing the accumulation and building up those positions, right? Because, and kind of as hinted in the thumbnail of today's video, right, that the subject matter is buying Bitcoin, buy the dip, right? We see these kind of narratives being spun all over the place. And I think it's very much an opportunity here in this correction, because I don't think we're going to be seeing massive, massive moves to the downside. I know a lot of people are very cautious with this stuff, but in this structure that we can see across all of this time period, right, from March all the way to where we are today, we have an overlapping candlestick, an overlapping price action chart. This actually shows that there's not a huge appetite for massive sell-offs or massive buying. This is kind of a sign of ranging market. Yes, we have lower highs and lower lows. These are all pretty basic terms, but price action here with the overlapping nature of it shows that actually all we're doing is extracting liquidity, or there are players extracting liquidity from the market, which is kind of a given considering the kind of max pain that the Federal Reserve has kind of brought the market to. And what I mean by that is holding those interest rates as high as they have done for as long as they have done essentially just kind of sucks out liquidity. That's the whole point of increasing interest rates. It's to extract liquidity out of the market, stop spending, right? And so what you're realizing here is that max pain point where a lot of people have overextended themselves and it's now time to take profit. And we see that usually at the pivot point when interest rates get cut. It's at the point of max pain. I think we've experienced max pain, and basically that's kind of what we've been experiencing, I think, from March all the way across here. The ETFs have helped keep things buoyant. We have some pretty big players and all that kind of stuff. But for the most part, I think we're experiencing that kind of moment of max pain. Are we going to drop down significantly further? I'm not sure. The stock market's already correcting. Bitcoin's correcting. As I've said before, it's kind of linked to the stock market. So in terms of our price action, yeah, we're at a very interesting spot. I think we're going to move down. If we do lose this area, then we come down to that last little bit. There, I think there'll be mass liquidations, max pain for many retail investors, and then I think we're going to get a really good run. As I said many times before, and I say it again, I'm expecting 2025 to be a really strong year. Roll this up into a weekly time frame, and you can kind of get my thoughts here as to why. We haven't even come anywhere close to the elasticity curve that I have drawn out on our chart here. So we are still looking for well over $100,000 for BTC by the time this bullish cycle actually ends. There's lots of different ways of analyzing the market. We can talk about whether or not it's X amount of days after a Bitcoin halving event. We can take a look at the US election years. We can take a look at the Federal Reserve and their interest rates cuts and hikes, and how there's an impact on the stock market and on the crypto market. And we can take a look at supply demand metrics. There's so many different ways of analyzing the market, and we try to cover as many of these things as we possibly can. And for me, we just kind of take a look at all of those and we factor them all in. 2025 looks like a really strong year, where my conservative targets are between a $101,000 and $118,000. But I wouldn't be surprised if we actually start bordering more towards $130 to $135, because the longer that this thing takes, the higher in theory of touching this elasticity curve. We're not talking about 20,000% gains. We're not talking about 10,000 to 5,000% gains. We're not talking about those kind of levels. What we're talking about here is really just getting into around that kind of 700 to 800% from the bear market low point of around $15,500. So, we aren't talking, the cycles that we've seen previously, but we are talking some pretty reasonable gains across the board. And of course, I would love to see $1 million Bitcoin. I'd like to see all of this kind of model kind of getting broken out and seeing a fantastic run to the upside. There are a few things that could cause this, such as the issuance or the reserve fund, strategic fund over in the US, intentionally, looking at holding Bitcoin for the long term and maybe even paying off their US debt with Bitcoin in the future. You never know, right? These are fundamental things that can obviously create serious imbalance between the supply and the demand that could break these models and see significant gains. But as it stands today, with all the data that we have available to us, we can see here some pretty interesting returns on the sort of medium to long term. So begs the question, doesn't it? Should you be buying Bitcoin now, or should you be holding out? I think we're in a great area for dollar cost averaging, but I am expecting lower prices. But I'm not expecting us to go down towards $40,000, $30,000, or any of those numbers. Meaning that we're not looking to hold out for massive drops in the market to take huge advantage of. A lot of that should have been done in 2023 and early 2024 potentially. But we have seen some pretty decent prices, and I have seen good rationale and logics as to why we should be potentially pushing up higher. So let me know, are you going to be buying Bitcoin? Let me know in the comments below. If you found today's video useful and informative, smash that like button. I do appreciate that. If you are new to the channel, go ahead and subscribe, and I will catch you all in the next one. And if you haven't done so yet, guys, go ahead and check out my second channel, where I cover a lot more technical analysis on many altcoins.